Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Hump Day. It's Wednesday, April 11th. We got a few economic news to go over today. We'll start off with the Consumer Price Index, this also known as CPI report. This is inflation on the consumer level. It's important, but it's not the Fed's favorite gauge, so we'll kind of leave it at that. The Fed seems to favor more the PCE, or the personal consumption expenditure. Here's what we have here. We have 0.2% growth or increase in the month of February. Forecast for March is supposed to go down 1.1%, and it did come in at forecast down 0.1%. Now, if you strip out food and energy, we get what the core, and this is really what they look at because of the variables due to food and energy. It can sway back and forth. It can really move numbers around a little bit, and so they kind of take that out because they have no control over it. So as you can see across the board, we had a 0.2% increase in the month of February. Forecast is supposed to be a 0.2%, and it did come in at expectations. So the year-over-year on these, it went from 2.2% to 2.4 year-over-year for the headline number, and from the core, it went from 1.8 all the way up to 2.1%. So we're reaching that 2% threshold that the Fed likes to keep us at, and now that now that we've tamed it, this could be something that they might look at later, at maybe increasing rate hikes. But again, it's the PCE they're going to be looking at, so we'll have to kind of wait and see when the PCE's numbers comes out, see if they're on the same thing. Now, one thing to keep in mind is that when they look at year over year, it's a rolling 12-month average here. Now, we had some low data that just fell off as we reached March, that fell off, that was keeping the inflation numbers lower. Now that those are off, of course, we had that kind of that big spike, and that's where that came from here. I'd have to go back in the numbers to see if the PC is the same way, but it could very well be as well. Now, speaking of Fed, we have by 11 o'clock Pacific Standard Time, the FOMC minutes might be released. Now, this could talk about inflation, some other stuff, and could create some volatility in the markets. But let's see what's being talked about in the markets here with the headline news here. And currently, the stock market's down. Now, we've had some fluctuations where it kind of eased up a little bit in that, but for the most part, what's taking the news is right here: Syria and Russia. There's been a lot of tweets going back and forth with Bashar gassing his own people, and then threats of missiles coming Syria's way, and then of course Russia backs Bashar and stepping up and talking retaliatory measures as well. And the tensions are escalating between these three countries here as we're going through this day, and that's what the markets are really kind of taking. Now, as you'll see here, coming up here pretty soon, I'll touch on that a little bit. But also, we've been talking a little bit about China and Russia. I'm sorry, China and U.S. relationships. Now, they're investors are looking at it as a wait and see because there's been some proposals back and forth. We're kind of see if there's anything that might be acceptable to one another. So that seems to be in a wait and see mode. So they're not worried so much about that at this time, as we saw some tweets earlier this week. Kind of going back and forth, kind of some nice tweets back and forth. So it kind of eased the market's tension that may not escalate into something more than what they were concerned about. But right now, the big thing is Syria and Russia, and that seems to be taking the news out of things right now. That seems to be what's kind of, with the CPI number coming in, and then perhaps even the FOMC's numbers coming in, or what it states. This could supersede all that. Now, tomorrow also we have the corporate earnings report starting for Q1 of this year. We'll begin to see how those comes out. So you may see news on that as well that could interfere with what economic data we see as well. So let's go ahead here at the bond market. So the bond market is currently up about 9 basis points. With that higher CPI number, typically this would cave a bit more. But because of the geopolitical news, it's kind of keeping bond markets up. So this is kind of artificially up right now based on the our geopolitical news, which is kind of superseding that of the inflation data we just saw here. Now, don't be concerned about this big drop here. We had what they call a bond rollover. Every month, because these are bonds are on a 30-year increments. Every month they have a reset in the pricing, and it doesn't affect your interest rates or the level. It's just they reset the pricing, and that kind of translates to minus 17. But in reality, we lost maybe 5 basis points yesterday. So as you can see, we are getting the squeeze here. We are testing both levels here. We are starting to get to that squeeze. And at some point, it could be moved, pushed one way or the other. Now, again, with all the stuff that we're seeing, unless this geopolitical keeps continuing, if it's strong enough to keep continuing, that's the only way the bond market could potentially go up. Otherwise, everything, all the other data that we're seeing, like the CPI report, or perhaps even corporate earnings, is that it could push the bond market lower. And why does it get pushed lower? Well, inflation erodes the value of the bonds. And then corporate earnings, people want to jump in the stock markets if if the economy's doing that well. So they're going to jump in the market, and these guys compete for dollars. So money's going to leave the bond market going into the stock market and, get the higher yields or rate of return on their money here. So speaking of yields, here's the 10-year Treasury. It's down currently. We're down to about 2.77 so far this morning as it got pushed on, as we see the 50-day and 25-day moving average crossed. And we're getting kind of pushed down a little bit lower today as a result of what we were talking about with the Syria, Russia, and U.S. Tensions rising here. So that pretty much concludes for the day here. If you guys want to get more data, just come over to Twitter. You can find me at Mike Bjork on Twitter. I do post throughout the day. And otherwise, I hope you guys enjoy the rest of your day. Thanks for watching. I look forward to see you guys tomorrow. Bye-bye.